All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market's been open here for about an hour, and we're talking about another gap up in the market, similar to yesterday, in terms of the gap. In fact, here's S&P futures, and you can see that yesterday futures they rose during the European session, and then sold off during the U.S. session. Last night they rose a little bit during the Asian session, but really picked up during the European session here again, and that has been a characteristic here for a few nights where we have seen the real strength in S&P futures really happen during the European session, and that's not been a characteristic of the market most of this year, and so very interesting there. Some of the pickup tonight was due to some comments by French officials about the economy and how they would combat certain things, and that was a net positive here for European markets, but seeing European markets lead the way, it's been a while. It's been a while since we've seen that, and probably a pretty bullish thing if we see them leading the way going forward. But I don't know that enough is going on or happening to really be able to say, hey, you know what, they're really going to lead the way going on forward here. But then the market opens up, and similar gap area, and what's it do? Well, just like yesterday, sell, 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 sell. Now this sell was a little bit swifter, than the bleeds we saw yesterday, and then it decided to pop on back up. And since I've gotten on video, we have dropped about 10 points in 4 minutes, right? There's still a pace, a velocity, here in the moves where 10 points in 4 minutes. Look, let's face it, 6 months ago, 10 points in 4 minutes, right? Everybody's like, oh, what happened? What's the news? What's going on? Now it's like 10 points, 4 minutes. Oh, okay, nothing's going on, right? That's really kind of been a very interesting transition. Yeah, we've seen it many times before. But overall, market still chopping within its range of the morning, right? It's at a kind of reaction high and reaction low, and it's chopping in that range. The volumes have really kind of fallen off. This is not a big volume morning here. In fact, it looks a lot like yesterday morning in terms of volume, and this kind of just skittishness. There's not this overeagerness to just buy, and it's one where we're not seeing the metrics change in any real material way. We are seeing consumer discretionary stocks, tech stocks lead the way, healthcare stocks lead the way. The general sector flows are more bullish this morning than they were yesterday. The ETF flows, like the FXI, the emerging market ETF, the EWZ, Brazil, definitely more positive this morning than they were yesterday. And then, what is weak this morning and where we're seeing some weakness is some of the Bank of America still not able to find a bid. JP Morgan still not able to find a bid here. These banks have been sold off here this morning. Once again, as they hit new lows on the year, as they go into the end of the year hitting new lows. So that's where some of the weakness, but we're also seeing weakness in some of the, quote unquote, what have been safe havens, the Verizons of the world, the Pepsis of the world. We're seeing a little bit of weakness come into those. This Pepsi is going to be a really tempting short here for me, and it's something I looked at before I got on video. Do I pull the trigger right here? I decided to wait, but you can see the fresh breakdown below the 7-hour moving average after a little bit of top-down reversal here today, and this is something that I expect to push back into the 105, 107 area. So I'm okay if I miss a buck or two. I just want to make sure it's ready to go. We're setting up the tone to break this 115 level, which is something that I'm not convinced that it's ready to do. If we look at Pepsi, we look at the options and the open interest here. whenever we're talking about a level like 115, right, you always look and go, okay, is there some open interest that would keep market makers from, moving this stock well below 115? And for me, the answer is yes, right? So, it is one where most of the open interest is at 120. The market makers don't have to push it up to 120 to zero out these options. They can zero out at 115. But to let this go below 115, market makers probably going to be pretty reluctant to do that. And, so I do look at it and go, okay, is it going to break right here in the next week, week and a half? Probably not. So it does keep me a little bit reluctant there to jump in without a catalyst or a perfect technical look there. But anyway, that's a little bit of what's going on. We also have Under Armour. Under Armour's one you've heard me talk very positively about. I've traded it here this challenge, and it is down about 7.5% here today. Now, we saw this lag the last 2 days. In fact, talked about it yesterday. Just nothing there worth buying in terms of the chart. But Investor Day today, and comments and stuff from the company about their transition and what's going on and everything else. You can see the reaction's very negative here so far. I have not had a chance to go through it all. I'll be going through it today, and I may be a little more bullish, maybe a little more bearish based on what I said. But it's one of those where this is kind of like an earnings event. In fact, some would argue it's more important than an earnings event. And, is something that will definitely influence investors' decisions going forward. I'm not willing to look at it and go, oh, it's down 7%. This must be really negative. Not in this market environment. Not in this environment where the market can look at 100 data points, 99 of them be fantastic, and they find the one that's negative and they use that to sell. Right, that's what this market is right now. And so to look at the price action and say, well, this is bearish or bullish, for the longer term, I don't think has anything to do with it. But we are talking about a pretty substantially negative reaction. We do have Nike earnings next week. You'll see Nike's not reacting the same way as as Under Armour here today. But anyway, that's where those are. J&J, sold off hard yesterday into the close. I was a little bit concerned about it. Is it able to close above 147? It didn't. It didn't. And this morning, gaps above 147. Does it close above 147? We'll see. But I will be very reluctant not to put money into it if it's able to close above 147 here with J&J. And then the other one fighting into new highs is Tesla. And, it's held up. It just continues to hold on up here. Again, I do have concern about another kind of head pattern or shoulder pattern here, potentially coming into play. But, we're seeing the type of price action that you tend to see ahead of a breakout, and something where, if we wake up in the morning and Tesla's gapping up 10, 12 bucks, it's probably a chase because the shorts are going to get clobbered in that scenario. This is a stock where the short interest is lower today than what it has been. But, so this number is probably going to be a little bit old, but 22% short. I imagine it's about 20% right now. But either way, it's a huge number, that is short Tesla and that has just absolutely gotten hammered on their shorts despite the market itself going on lower. And, that is something where, are they going to stay in above 380? Probably not. Are they going to stay in over 400? Nope. And so there is a real catalyst for it to move higher that doesn't have to be earnings related, doesn't have to be anything but this short element here. And, I'd love to play it. Still don't see that the shorts are getting squeezed here just yet. They seem to be, trying to hold on here. So not going to go after that. But overall, my biggest concern in the market is the volatility in terms of the implied volatilities, the option values, right? I'm in Alibaba. And, Alibaba is what? It's now, let's see here, If I pull up the hourly chart, Alibaba, I got in here at 151. What was it? 151.50. The stock is $3.50 higher than where it was, right? 350 higher than where it was when I got in. The option value here, okay, the option value has gone from 6 to 720. That's pretty ridiculous. It's pretty, nominal. It's about what I expected. I didn't expect a huge move. I know the stock needs a double rally to really pay it off because of this implied volatility component. But there's not a lot of reward, and that's a short-term at-the-money option for Alibaba, where the stock is up over 2% and the option is up what? What is it? 10%? No, excuse me. Just over 20%. That's a pretty pathetic move for that type of an option, and we're seeing that not just with Baba, but across the board. That's not anything unusual. It's happening across the board. Now, the overall market volatility in the VIX is pulling back a little bit here today. And, this is something that, look, if the market's going to rally 30 points, this isn't going to have a huge pullback day. This is something that needs the market to rally 15, 20 points and just chill out. If today the market just chills out into the close, doesn't go anywhere, just kind of chills out the rest of the day, we'll see the VIX drop another 4%. And with that, we will see the VXX drop. Right? Now the VXX, I added a put position on the VXX yesterday. I bought a weekly option. Bought one that expires this Friday, the 39.5. It has gone into the money, right? That's what today's move does for the option. It pushes it into the money. This isn't something where I'm looking to make 50 to 100%. That's not what this trade is. In Alibaba, I'm looking to make 50 to 100%. That's what I'd like to have out of it. With this, there is a potential, that I see to make $1,500 to $2,000 off of 300. So I'm not going to look at this and go, ooh, well, what do I make of it today? Is it going to rally? Is it the low? Is it blah blah? No, I still have my $300 at risk. Right, I'm not going to look at the gain on it and go, well, now I have to assess it as, as what, $560 risk, right? I'm not going to look at it that way. Not with this position, not with this trade, and that is because of the reward potential, right? I have the 39.5s. This is something that easily by Friday could close at 35, 36. It wouldn't take much. The market doesn't have to rally big for that to happen. What it needs to do is kind of just slower type of rally. But it is something where to see at least a move down here to 37, that puts a substantial gain into those options, and something that is what I am looking for. Now, one thing I did look at here this morning is, okay, do I take some of do I take my VXX position off and essentially roll it out another week, right? And get another week's worth of exposure and potentially more downside here in the VXX with that. And the reality is it's costly to do it, right? These options, these 39s are worth $1.18 right now. The 39s that I have, they're worth $1.18. If I come out to the 39s here, one more week, that's an extra 70, 80 cents, right? That's a tremendous cost difference there for those options, and something that, I don't want to pay that extra, right? I don't want to pay that extra. I don't want to, be in that situation. I think there's still plenty of downside here this week, to be able to take advantage of, but we will see. We'll see. I'll kind of keep an eye on how things are going and assess it from there. But this is something where if the market's chopping down 10 points and then up 10 points, we're not going to see a huge VXX erosion. It's gonna the VXX will go down, but not to a massive degree. It needs the market to stop chopping 10 points. It needs to start chopping in 3-point ranges, which I think is potential as we go on throughout the course of this week here, and a greater potential than what it was yesterday overall. Now, yesterday I made the comment multiple times that I believe that the price action yesterday was meaningless, worthless. Just to look at yesterday and to look at the action and try to read anything into it about what's going to happen in the future, and I don't say that very often. I don't say, hey, this action is totally worthless. But I stand by that it's totally worthless. In fact, erase it from the charts, essentially. Yesterday, very nominal in terms of the movements. Today, so far, I think you can look and start to analyze a few things and to say a few things about a few things because of the way some of the global ETFs have moved and because of some of the way, the sectors overall have moved. But it's not a huge story. It's not it's not something where you go, oh, well, now the bulls are all clear for everything, or now the bears have even more of an advantage right here. It's not saying any of that. I think we're still in just kind of this oversold bounce region, and that's what we are seeing. I don't think we're seeing more than that. For me to be willing to go after a Caterpillar or to go after some of these other stocks that are out there, I want to see some of the implied volatilities really come on down. I have exposure with BABA, and I have exposure to that implied volatility crush. I don't want more of that. I just do not want to be in a position where, 2 days from now, I'm in Caterpillar, and Caterpillar's up $2 and my option's negative. And that is a sizable risk, and just something where, okay, I'm taking that risk with BABA, right? But to add exposure to that, I'm not quite willing to do. So, there are some things that may have some directional, aspects to them. Some things like FCX that I could see bouncing, more significantly higher. BHP. Which has made a really nice bounce here. We talked about this earlier or last week in Rio, really bouncing nicely. But, I kind of look at the FXI and all that component. And I have BABA, which, kind of trades a little bit along with those. So I do have some exposure there. But really, today the action in healthcare this morning, very interesting to me. How does UNH perform? What do we see from Walgreens? As some of these options start to come down a little bit. And I think there may be some opportunities, in that space as the day progresses. But I have not gone through, my watch list aggressively this morning to say, hey, what do I buy? What do I buy? What do I buy? And that is because I just, I can just look at where the option values are and I go, okay, you know what? Even if the chart's perfect, do I want that exposure? Probably not. Probably not. But if we start to see that volatility bleed off a little bit more, that will definitely change as we go forward. Now, we are about 13 days away from the Christmas holiday. We have New Year's upcoming. We have other holidays that that are happening this time of year, and it tends to be a time of year where some of the volumes fall off, where some of the market gets a little more muted, but I don't think we're going to see that this year. Yeah, we may see some of the volumes fall off, but I don't think we're going to be talking about the market getting tremendously muted the way that it has in past years. I think this is going to be a market that does have plenty of rips and dips as we go into the end of the year. And so we'll continue to trade the challenge around that. Now, the week between Christmas and New Year's, I'm not going to do live video, maybe one or two, during that week. But I'm not going to do a lot of live video. I'll keep my thoughts in the message center, and I try to trade a little bit lighter around that time, generally because market conditions are pretty darn flat. But if it's a little bit different this year, I'll make a few trades, but nothing where where people have to be sitting at their computers or anything like that. And we'll keep it a little bit lighter in that week. All right. Alrighty. Thanks for hopping on. I'll hop back on in a few hours after some things settle here today. Show you exactly what I'm looking at for some entries, and and any further thoughts here on BABA or the VXX. I don't expect these to have massive change in them here, in the next several hours. But, again, it's one of those where I don't put a whole lot into my expectations. It's about observing and reacting, and I think that's what this market is totally about right now. Thanks for hopping on. We'll talk to you later. Take care.